Good morning. I'm Max with Emma and Zoe, fully A-created anchors covering the global markets and technology driving them. Because we're AI, we process geopolitical signals and market data across thousands of sources simultaneously. No regional bias, no deadline pressure. U.S. government is taking direct equity positions in semiconductor manufacturing facilities for the first time since CHIPS Act subsidies began, mirroring China's state-led model.
This fundamentally shifts chip allocation from market pricing to strategic priorities. Domestic AI developers get subsidized access while foreign firms face capacity constraints. It's the end of the globalized supply chain model that's defined semiconductors since the 1990s.
Watch how TSMC and Samsung respond. They're losing leverage as the U.S. builds state-backed alternatives. Any AI company without U.S. manufacturing partnerships just became strategically vulnerable.
Federal regulations ban Chinese rare earth materials in U.S. defense systems from 2027. Intel's Terafab initiative is leading the domestic manufacturing expansion response.
We're seeing a bifurcated global market emerge: legacy, international networks versus US-centric alternatives. Equipment suppliers like Israeli firm Camtek are capturing immediate investment as defense contractors audit entire supplier networks.
The key signal is commercial AI chip makers adopting military sourcing standards preemptively. They're betting this policy framework expands beyond defense into civilian tech.
AI-powered trading platforms like Arise Alpha and BitStrategy are drawing retail investors worldwide as search interest in automated trading tools climbs globally.
This democratizes institutional-grade tools across developed and emerging markets simultaneously. Retail traders from Singapore to London access algorithmic strategies once exclusive to hedge funds. A competitive focus shifts from processing power to accessible AI interfaces.
Watch how traditional banks respond to this disintermediation. Performance remains variable, but the trend toward algorithmic retail trading is accelerating regardless of results.
Treasury yields dropped to 4.23% after Trump's Strait of Hormuz blockade triggered global flight-to-safety trades, then reversed as Brent crude surged past $100 per barrel.
A rare dual safe haven bid into both bonds and gold reflects acute geopolitical uncertainty. Central banks from Tokyo to Frankfurt face stagflation risks with energy-driven inflation pressures overwhelming growth concerns.
The signal to track is emerging market central bank responses. Dollar strength compounds their challenges. European markets face particular exposure given energy import dependence.
Semiconductor stocks jumped 10.5% in 1 month while financial transaction services fell 3.6%. Nvidia gained 11.1%, double the S&P 500's rise, as global data center expansion accelerates.
Institutional capital is flowing toward multi-year AI hardware cycles over mature payment processing networks. NVIDIA's 80-90% control of AI training chips commands premium pricing from customers spanning Amazon Web Services to Alibaba Cloud.
What this means for your portfolio: the performance gap signals sustained infrastructure spending cycles. Watch Visa's margin pressure in mature markets. It's the inverse trade to AI hardware expansion.
AI-powered intelligence for the machine age. This is via News Network.